Poland's journey from a struggling nation to a burgeoning economic and military power is a story of resilience, strategic reform, and visionary leadership. For centuries, Poland was seen as vulnerable due to its geography, with its central location making it a frequent battleground for European powers. Yet in the past 30 years, Poland has turned its historical liabilities into strengths, achieving a remarkable economic transformation, building one of the EU's most formidable militaries, and developing into a promising leader in Central and Eastern Europe. This shift from a Soviet satellite state to a potential superpower is driven by multiple factors, including strategic economic reforms, a disciplined approach to governance, and significant investments in defense. Historical struggles and Soviet legacy. Poland's difficult history left it in a weakened economic and political state by the end of the 20th century. In the late 18th century, Poland was partitioned by Austria, Prussia, and Russia, leading to the country's disappearance from the European map for over a century. After regaining independence in 1918, Poland was ravaged again by the two world wars. War II was particularly devastating, as Poland was caught between Nazi Germany and the Soviet Union, suffering severe population losses and the destruction of much of its infrastructure. Following World War II, Poland fell under Soviet influence, becoming a satellite state. During the Soviet period, Poland's economy operated as a command economy, which centralized power and stifled private enterprise. Production was focused on heavy industries, often ignoring consumer needs and driving widespread shortages. While factories produced steel, coal, and machinery to support the Soviet Union's ambitions, Polish citizens faced long waiting lists for consumer goods and regular shortages of essentials. Moreover, economic policies were dictated by Moscow, with little regard for the welfare of the Polish population, leading to deep dissatisfaction and ultimately widespread resistance. The post-Soviet transition, shock therapy, and economic reform. With the Soviet Union's collapse in 1989, Poland seized an opportunity to reform. However, the transition was not without challenges. The economy was stagnated, poverty was widespread, and essential goods were scarce. Recognizing that gradual reform would not be enough, Polish leaders opted for shock therapy, a bold economic approach championed by Finance Minister Leszek Balcerowicz. Known as the Balcerowicz Plan, these reforms aimed to dismantle the centrally planned economy quickly and move Poland toward a free market system. The shock therapy reforms were radical. Subsidies to unproductive industries like mining and shipbuilding were cut. Price controls on essential goods were lifted, and state-owned enterprises were restructured or closed. While these policies led to a brief period of hyperinflation and a rise in unemployment, they set the foundation for Poland's eventual economic boom. Legal reforms, the establishment of property rights, and the relaunching of the Warsaw Stock Exchange created a business-friendly environment that encouraged entrepreneurship. Small and medium-sized businesses began to thrive, meeting consumer demand and driving innovation in a way that was impossible under Soviet rule. A cautious approach to privatization. Poland's careful management of privatization played a key role in its success. Unlike many former Soviet states where rapid privatization led to the rise of oligarchs, Poland pursued a more gradual approach. This allowed the government to prevent the concentration of wealth in the hands of a few and fostered a more equitable economic environment. State-owned enterprises were privatized slowly, under strict regulatory oversight, and legal frameworks were established to ensure fair competition. This cautious strategy not only prevented the rise of oligarchs, but also promoted a strong democratic foundation for the economy, distinguishing Poland from other former Soviet nations. Economic growth and EU membership. By the late 1990s, Poland's economy had stabilized and was growing steadily. Foreign investment poured into the country, attracted by its relatively low labor costs and skilled workforce. Poland's workforce was young, well-educated, and willing to work, making the country a prime destination for companies in manufacturing, IT, and services sectors. When Poland joined the European Union in 2004, it gained access to a single market and became eligible for EU structural funds, which were essential in modernizing infrastructure, education, and public services. EU membership allowed Poland to expand its trading networks and attract more foreign direct investment, FDI, further fueling growth. EU funds were strategically invested in building highways, modernizing cities, and improving public transportation, while trade liberalization made it easier for Polish companies to export goods and access technology from more advanced EU economies. The Polish economy grew by leaps and bounds, and GDP per capita nearly doubled from 2004 to 2020. Today, Poland's GDP per capita at purchasing power parity is around 80% of the EU average, a remarkable achievement given it was just 39% in 1990. Middle income trap, a challenge to sustained growth. Despite Poland's economic success, the country now faces the risk of a middle income trap. This phenomenon occurs when a country's growth slows after reaching middle income status, often due to a reliance on low-wage labor or insufficient innovation. As Poland's economy matures, its labor costs have risen, making it less attractive to foreign investors looking for cheap labor. Compounding this issue, around 40% of Polish industries are foreign-owned, which means that as wages rise, these companies may relocate to lower-cost countries, reducing Poland's industrial base. To avoid the middle-income trap, Poland must encourage innovation, increase research and development spending, and cultivate more Polish-owned companies that can compete globally. Currently, only one Polish company is in the Fortune 500, compared to dozens from countries like Germany and the UK. Developing a strong domestic sector, fostering high-tech industries, and investing in education and skills training will be essential to sustain Poland's growth. Military buildup and strategic defense. Poland's strategic position in Central Europe has historically left it vulnerable to external threats, particularly from Russia. Given this history and current geopolitical tensions, Poland has prioritized building a robust military to deter any future aggression. After joining NATO in 1999, Poland consistently invested in its military, modernizing its forces and developing strong alliances, particularly with the United States and South Korea, for advanced weapons and equipment. In recent years, Poland has increased its defense spending substantially. Following Russia's invasion of Ukraine in 2014 and 2022, Poland's defense spending now accounts for approximately 3.9% of its GDP, the highest in NATO proportionally. This figure is expected to grow to 5% in the coming years, as Poland aims to build the most powerful military in Europe, purchasing new tanks, fighter jets, and advanced military equipment. This investment reflects not only a focus on national security, but also Poland's ambition to be a leading military power in Europe. Demographic and domestic challenges. Poland's progress is not without its challenges, especially regarding demographics. Like many European countries, Poland has an aging population, which could strain public resources in the coming decades. Additionally, Poland has struggled with a brain drain, as many skilled workers have left for higher-paying opportunities in wealthier EU countries. However, this trend has started to reverse, as many young Polish professionals are returning to take advantage of better opportunities at home. Another concern is Poland's low household savings rate, one of the lowest in the EU. Higher levels of domestic savings typically lead to increased local investment, which is crucial for sustainable growth. Poland's reliance on foreign investment for growth could prove limiting if external capital flows decrease. The path forward, Poland's superpower potential. Poland's future as an economic and military power will depend on its ability to navigate these challenges while capitalizing on its strengths. The country has a highly educated and motivated workforce, with productivity levels comparable to some of Europe's most advanced economies. Further development of domestic industries, especially in technology and high-value manufacturing, could propel Poland to the next level economically. Poland's geopolitical position, strong alliance with NATO, and growing military capabilities make it a crucial player in European defense. With continued strategic investment in education, innovation, and infrastructure, Poland has the potential to not only avoid the middle-income trap, but to become a leading European economy. Poland's journey from economic hardship to becoming one of Europe's rising stars showcases the power of resilience, strategy, and smart governance. As it continues to invest in its economy and defense, Poland is well positioned to play a pivotal role in Europe's future. However, sustaining this growth will require continued reforms, investment in innovation, and a focus on building a robust domestic economy that can support Poland's aspirations to become a true global power.